Hey everybody, it's Wayne coming at you with a portfolio update. We are in week 50 of 2023. Lots to cover, so we're going to go ahead and jump right into it with Robinhood. As you guys can see, total portfolio value is just over 421,000. We had a pretty fantastic week, month, and if I'm being honest, the whole year was pretty fantastic. For the week, though, we're up just over 2% or nearly $8,800. If we go ahead and zoom out to a month's view, I am up just under 4% or about 15,000. But year to date really is the exciting number. That's right, I am up nearly 35% year to date for an unrealized gain of just under 110,000. A lot of that has to do with the amount of tech that I'm holding in my Robinhood portfolio. Now, all time, I am just above 10.5% or about 40,000. You know, one of the things that I love about M1 is the ability to daily cost average, but I'm also doing the same here in Robinhood. Take a look here at the right-hand pane, and you can see here a series of stocks, some of which I have paused the daily purchases based on perhaps the value being above what I want to pay. But I have been pretty consistent of late with ADC, Costco, SPY, and VNQ in which I'm making daily buys. Some of them are $10 every single day, but Costco, I've been able to increase that to now $50 every single day, and I couldn't be happier as I really want to increase my position in Costco. Let's go ahead and break down the total portfolio value of 421,000 because it's not all comprised of stocks and options. A little bit more than 85% is going to be stocks and options, or 362,000. That means the remaining 13.85% is going to be brokerage cash. The reason I keep so much cash here on the sidelines, if you guys have been following me or other videos that I create, you know that I love selling options. And so that cash collateral is definitely critical to being successful in generating that premium that I like to from selling cash secured puts. Can't give you a look at the portfolio without talking about the 5 biggest winners in my Robinhood. And you can see here, Microsoft continues to dominate for the years. For the 201 shares that I own, I am up nearly 24K. Microsoft has had a pretty fantastic year, as has Apple, Amazon, Meta, but I gotta tell you, I don't think anything can compete with my total return, and that's gonna be Celsius. Take a look here. Celsius is currently at just over $49, and the 300 shares that I own, now it started off with 100, but Celsius recently had a 3-to-1 split. So for the 300 shares that I own, my cost basis is a very smooth $25.47. That means my total unrealized return is just at 95%. If we were to factor in all the premium that I've earned from selling covered calls on these now 300 positions, I have no doubt in my mind this percentage would be closer to 110, maybe even 120%. Going back here, we can't give you the top 5 winners without mentioning the top 5 losers, and I have my fair share of losers in my Robinhood brokerage. Number 1 goes to Tesla. For the 300 shares that I own, I am down just over 7,000. Traeger, by far one of the worst performing positions in my portfolio. Take a look here. For the 400 shares that I own, my average cost is $12.06. Currently, Traeger is going for $2.68%, so I am down big time when it comes to my overall Traeger position. Pfizer, CVS, and UPS also round out the top 5 biggest losers in my portfolio. UPS, I have no concerns about whatsoever. I also think CVS is going to rebound, although I wish I did not have an average cost this high. Pfizer, though, has been a bit of a surprise. I think what we're seeing here is an overall correction from COVID days. Pfizer has seen a pretty sharp decrease this past month, and that's bad news for me because my average cost on those 200 shares is just over $40. This past week, Pfizer saw 52-week lows. I'm not quite sure if I'm ready to average down, but one thing that I'm actively doing is run into the bank with those consistent dividend payments that Pfizer has been known to have. But I'm going to go ahead and watch closely all of these 5 positions here amongst the biggest losers in my Robinhood. All right, moving on here to M1, which has seen some of the biggest changes since I began investing in the stock market in 2021. Currently, the value of this portfolio is just over 165,000. Let's go ahead and take a look here at these transfer rules. Now, throughout the year, I have been very consistent with my daily cost averaging. And in fact, as of the last video, I continue to daily cost average $125 every single day, Monday through Friday without exception. I have recently adjusted this rule going forward to now only contribute $100 on a daily basis. But look at here at the top rule, I have created a custodial account for my son. I am very excited in the future video to share the one ETF that I will be investing in on his behalf. And so going forward, I go down from $625 that I was contributing to my taxable account to now $500 on a weekly basis, and then $125 on top of that amount I'm going to be investing in my son's account. Let's go ahead and give you a look here at the portfolio and notice of that $165,000, there is a large chunk of cash that is uninvested. In fact, I have sold out of a lot of positions, and I'm going to give you the rundown here. Take a look here at all of the positions that I sold out of in the past 2 weeks or so. This is a spreadsheet that I've created, and you can see I sold out of Ares Commercial Real Estate, Ares Capital Corp. I sold out of Gladstone, Energy Transfer, Stag, Horizon Technology, EPD, as well as Hercules Capital. I was able to sell out of all of these positions, freeing up nearly $32,000 in cash. Ultimately, I made this decision for a few reasons. I realized that I was very heavy in the BDC sector. I also realized a lot of my positions, and I'll take Stag and Horizon for example, although they were paying me some pretty phenomenal monthly dividends, right, totaling nearly $1,100 or $1,200 on an annual basis, there really wasn't just much growth though with those investments. And so I am going to take this cash and I am going to redeploy it slowly into the positions that I have in my long-term hold slice. The idea being I want to focus on a stronger growth rate for all of those positions and not just focus on higher yield positions, which all of these I think you would agree in fact were. So there you have it. These are going to be all of the positions that I sold out of. And in doing so, I now have about $28,000 in capital that I need to redeploy. Let's go ahead and give you some activity for the past week. And with that big chunk of cash, I have been slowly buying on a daily basis about $1,000 every single day. Again, I don't want to take that $30K and just all throw it in the market at one time. It's unfortunate though, right? Because the last week, the last month, the markets in general have had an incredible run up. Maybe in hindsight, it would have been the wiser decision to put all that cash immediately into the long-term hold slice. But for the time being, I'm going to go ahead and slowly redeploy that into the long-term slice. Speaking of that long-term hold slice, let's go ahead and give you a quick summary of all of the positions that I intend to invest in, not just in the foreseeable future, but we're talking 2024 and beyond. And those are going to be O, Realty Income, AVGO, Caterpillar, Lowe's, Union Pacific, Texas Roadhouse, Visa, UNH, Snap-on, VDE, Waste Management, SCHD, Procter & Gamble, Johnson & Johnson, Pepsi, AbbVie, and last but not least, McDonald's. I hope you guys are going to remain tuned in. I'm really excited to see whether or not I can finish just as strong with reaching my $15,000 a year in dividend income goal. The reason I have a little concern about that is because, as you guys have seen, I have sold out of a lot of higher yielding dividend paying stocks. And so you guys will have to remain tuned in my next dividend update to see whether or not I'm able to reach that coveted benchmark of $15,000 in passive income. Hey, I hope you guys enjoyed the video. Be sure that you guys are subscribing, liking, and we'll see you on the next one.